So do you want to buy gold or buy Treasuries?
Right here, gold. Yeah, no question about it. I mean, if it's a binary choice right now, and you're looking at money supply growth, economic growth, the future path of the Fed, and you're talking about total return the next several years, and particularly if you have a 3, 4, 5-year time horizon, no doubt it's gold. Yeah.
And that's because weaker dollar, more inflation?
Well, it's really because if you look at the future path of monetary policy, not only in the U.S. but overseas, right? It's going to be lower rates. In the next recession, the Fed is going to zero, right? But the 10-year is already at 2.1, 2.15% in that range. So we see that going to 0.5 or 50 basis points to 100 basis points next recession, but gold could certainly retest its highs back in 2011. So you have more upside, and you have the wind at your back from global central banks.
What about value? JP Morgan says value right now is like a trade of the decade.
You know what? People have been saying that for about 4 or 5 years, so it's very tricky to call these big mega rotations from value and growth. That being said, in theory, we could be set up for a similar one that we had from 2000 to 2002. In the late 90s, you had tremendous outperformance for growth of all stripes. And then what finally triggered that revaluation, of course, was a dramatic economic slowdown, which is where we are today. So there's the potential for that, but it's a leap of faith.